Well, sometimes it seems like yesterday, but it was 10 years ago this week that Lehman Brothers collapsed and the financial crisis followed, with the U.S. economy tanking. And despite a strong jobs market these days and stock prices that are in many cases at record highs, some are wondering if we're ready for the next crisis. We have former Fannie Mae executive Tim Rood with us today, Money Mac Press chief technical analyst Dr. Barton, and one of the all-time greats, evening edit host Elizabeth MacDonald, also joining us from the newsroom. So not that you guys aren't, among the all-time greats, but just that EMAC was, I believe, a first ballot Hall of Famer when it came to financial journals. Is that right, EMAC?
Hilarious.
Tim, why don't you start us off on this? We do these segments all the time, but now it's this round number of 10 years that we've removed ourselves from at least Lehman Brothers collapsing. What's better now? Have we fixed a lot about the system?
Hi, nice to chat with you, MacDonald. So yeah, there's certainly a lot different. I mean, if you think back to 2007, the crisis, you had a couple of things going on. One, you had banks that were over-leveraged. They found out that they were obviously too big to fail. You had a lot of private capital coming in and replacing the government in terms of the takeout for mortgage-backed securities. You had a lot of creative, I think is the best euphemism I can come up with, for mortgage products, no documentation, subprime mortgages. And you had companies like Fannie Mae and Freddie Mac that had historically backstopped the U.S. housing market, kind of falling back, taking a back seat to the private capital, yet they were still reasonably well capitalized.
Right.
If you fast forward to where we are today, a couple of notable things. One, Fannie Mae and Freddie Mac, I've been in a conservatorship for 10 years. Last week was their anniversary. They went from 50 to 1 leverage to now about 700 to 1 leverage. If we had a longer show, I'd take a long pause. That's a pretty big deal. The big banks, you're seeing that they've actually grown 2 to 3 times since that time.
Right.
You're seeing the private capital has actually stepped back from the private label securitization, and you're also seeing banks step aside and letting independent mortgage companies take their place. So now these new counterparties are not the big depositories, but they're independent mortgage companies. So last but not least, the mortgage products that were those exotic mortgage products have actually been legislated out of existence.
The creative ones. So where does that leave us then, Liz? I mean, would you be confident in telling someone at a party or something happens this weekend, they say, could this ever happen again? Would you be confident in telling them no, or no? Are you worried?
I wouldn't be confident. Yes, the U.S. regulated banking system and Europe and overseas, they have cleaned up their acts. We know that. But it's an important point that's made that, companies like BlackRock, the non-banks, are $6 trillion in assets or so, and I mean, what's the government oversight there? I'm not asking for government oversight. I'm just saying the risks are still out there. We know that junk bond debt has easily doubled since the crisis. We know that the big problems overseas are countries like Turkey and Argentina, who continue to basically not have their economic growth and continue to borrow in U.S. dollars as U.S. dollars strengthen. So there's always that fear of a debt crisis, of course. I think that, the other problem that we still have is this thinking in governments that the way to fix income inequality is to give everybody a home and to relax standards. And that type of attitude, even though that has changed, that type of attitude that the government can fix things like that and step in and make things worse, I fear is still out there, as I just was pointing out about countries like Turkey and Argentina not right-sizing their economies and instead making big mistakes.
Okay, then, Dr., put that all together. If what both Tim and Liz said is correct, is there a next type of crisis that maybe doesn't resemble or is an exact replica of the last one that you're worried about?
Well, I think you're right there, Connell, that it's not going to be an exact replica, and Tim and Liz both made great points about a lot of the things that we've cleaned up. And I think Tim used one word that was leverage. That's really important right now, because if we look at the growth that the markets have had, and we look at the margin debt, which is at very high levels on an absolute basis, but on a capitalization basis, based on where we are with the market, we had much, much higher leverage back in 2006, 7, and 8 than we have now. So even though the margin's gone up, the markets have gone up more. So we're not as leveraged. I think the places that we're going to have to look for any signs of crisis are Liz's points that she made. And I'll say even one more specific, and that's China's debt. Their debt ratios there have continued to go up, and that's where probably the straw that breaks the camel's back.
Well, that's actually not a bad point at all, especially with all the back and forth we're talking talking about with trade and how much pressure is being put on the Chinese economy as a result of that right now. As a final point, guys, and maybe Liz, you talk about this. I'm not sure if we talk about all the financial parts, as Tim said, the creative financial instruments that may or may not have led us down that road, and the bailouts and all the rest. 08 really had an effect, don't you think, on the politics and the culture and the way people just don't trust maybe necessarily Wall Street or just elites in general. What impact do you think 08 had on all of that?
It's a great point and a great question you pose there. It really, to my mind, it started earlier with the idea that long-term capital management, a big hedge fund would get bailed out by the Federal Reserve in 1998. That set the stage for this attitude of bailouts. Really, the first big bailout was after 9/11 of the airline industry. The first responders in the crisis was the Federal Reserve and central banks around the world. I'm not sure that attitude has changed. In other words, will we let companies collapse? We know that Europe and the U.S. have these systemic, risky financial institution structures where the governments say they're going to step in and stop a bank from imploding. But I'm not sure that they can even spot it ahead of time.
I doubt it has. I mean, we have to go now. But don't you think that, real quick, Tim, that's true that we would still bail some people out? There's some companies that would still get bailed out.
Yeah, one quick point on that. To Liz's point is, from these credit bubbles, asset bubbles, we figured out there's only 3 ways out. You can either grow your way out, which we're finally looking like there's hope. You can either default your way out, which the economy or the government hasn't really shown that it's got an appetite for that, or you inflate your way out, and we're darn excited about inflating our way out.
Exactly.
All right, we do really have to go now, guys. Thanks a lot, DR, Tim, Liz, good to see you all.